just look at this. That's me on YouTube on the Etoro page. Alright, look at that.
That's now over, do you think? Is that what you're saying?
Oh, I don't think it's even close to being over. But I have to say, I really admire the people on the Facebook group who are like trotting along.
So yesterday we had a crazy day in the market, and that's why I need to publish this vlog. But first of all, thanks Tom and Owen for having me on your podcast, and thank you Bullos and Sam for letting me do the webinar. So that was last week and 2 weeks ago. Yeah. So I really wanted to talk about something I wrote on my wall yesterday. It was that... So something I wrote on my wall yesterday, and that was that the market dropped quite... Well, for the EURUSD, what happened was that the market has rallied quite a bit, and that's leading into the French elections, which is kind of interesting because my whole point of my thesis was I think that this market event of Le Pen winning or Mélenchon winning is actually underpriced. Whether that's true or not, it is a very small possibility with huge implications. And given the demographic studies that I've done, you can read that on my blog, I think it is possible that they can win.
Because in the 1930s, which is quite similar to a lot of the period that we've been through, economically, we had the wealth gap, we had large debts, we had zero interest rates, some things that are very economic. During those same types of period, we experienced more populism.
So having said that, the market has kind of underpriced it because this kind of black swan events do happen. We see it with Brexit, we see it with Trump, but it can happen. So that's all I'm saying. And my belief is that if she does win, this is gonna go all the way back to par. So even if I lose, I don't lose that much. If I win a huge amount. So that's kind of the kind of outsized bets I like to take. It's not very, very high probability, but I think it's good enough to try for it. So I went in about 2-3 weeks ago, and what happened was that the market went from 108 all the way down to, oh actually 109. All the way down to 105, and that was when I was quite well in the profits. In fact, my account was up for about, I would say about 1,002 from that, just that one trade. And yesterday, or the day before, after Theresa May announced that they are going to do a snap election, it rallied all the way back to 107.9 or 775, and that is actually very close to where I entered. So you saw, for some of you who are copying me, you will see that suddenly there's this large drawdown. These last few days have been brutal. And the question is why? So I spent quite a lot of time thinking about that. This is actually why I also don't do intraday trading. It's because it depletes my ability to do my research and think clearly. Because once you're very emotional about things, these trades become very difficult. And my conclusion is that this market is a little bit exuberant. It is pricing in a Macron win. It is expecting it already, like it's a done deal, and that's just simply not the case. And for me, I was not expecting the market to be so confident of itself because we had Brexit, because we had Trump. But now that it has happened, it created even more mispricing. I wanted to vlog today to tell you that I could have managed this a bit better, in the sense that I could have anticipated such an exuberant market. If I have done anything differently, I'm not sure. Because like I said, it's difficult to go out and come back in. So it's a bit hard to say. But this is one of those things where I think experience really comes into play, because had this been like 2 years ago, I would have freaked out and just exited my trade, not looked at it and said, oh, too bad. I would have made maybe half of the amount that I made. I'll just let it trailing stop, that's what people use trailing stops for, and said, okay, I'm out. And I made whatever pips that I wanted to make. But for me, because I'm trying to get better, because I'm trying to learn this macro style of trading, I am actually trying to add position sizing, I'm trying to do different things and trying to stick with my thesis. Again, this kind of experience I can't really teach you guys. It's just something that you need to experience for yourself. Crazy markets happen all the time. A little bit of market positioning maybe, a little bit of exuberance markets, a little bit of buy the rumors, sell the news, and that happens a lot as well. It'll be interesting to see what happens on Monday, but I do expect either Melachon or Le Pen to get in on to the second round, and if that happens, I think that the thesis is still good. Also, shout out to Ed Bin Madid. Thanks for supporting me and copying me. Yes, I'd rather you not risk more on this trade, simply because if you put in money now, you will suddenly have this increase in exposure, and the risk is then become a bit different. Just for balancing purposes, I'd rather you not invest with me now. Add more a little bit after this election thing is over, so that's 2 weeks from now. So 2 weeks from now, start investing again. I have one more thesis that's coming up. This will be the end of May. It's regarding oil, so I'm very excited. I've been looking at this for a very long time, and it's kind of working out, so I'm very excited for that one. So yeah, you can add more funds then.
I want to focus on one of the points Ray made in our interview, the likelihood of crappy future investment returns.
You can expect that your investment returns are going to be very low. Okay, you can know that.
Ray did not state this as an opinion. He stated it as a fact. Many other market analysts and investors are saying the same thing. Why? Price. In the past, the best predictor of long-term asset returns has been the price at the time of investment. And right now, on many measures, stocks and bond prices are close to their highest levels in history. Historically, when returns are measured from these valuation peaks, future returns are low. The market's return from the 2000 peak, for example, is well below the long-term average. Market returns from low valuations, meanwhile, have been excellent. Investors who bought stocks when they were historically cheap, such as in the early 1930s, the early 1980s, and in the aftermath of the financial crisis, have done very well. Ray Dalio and others believe that today's high prices will be followed by low long-term returns. And unless it's different this time, a phrase that has been described as the 4 most expensive words in the English language, history suggests that this time they're right. My thanks to Ray for giving us the time.